The answer basically is that you've got to work out why you're interested in gold and silver. You've got to understand what gold and silver are. I mean, particularly gold in the current context, what it is. You've got to understand that it is legal money without counterparty risk. Forget what the US Treasury says about gold being a pet rock or whatever. The reality is that in our common law and in everyone's common law, gold is money, it's final settlement, there is no counterparty risk. And the volatility isn't so much in gold. I mean, obviously there's been volatility in gold, but it's mainly in the currencies. So when you see, for example, the People's Bank of China buying gold, the way to look at it is actually they're selling dollars. And they have other use for those funds.
The markets for gold and silver are once again displaying indications of underlying strain. Volatility is rising, prices have dramatically declined, and traders are looking for guidance. Many believe that this is just another brief halt to the metals surge. However, Alasdair Macleod claims that the current situation is far more important than merely a temporary correction. According to Macleod's most recent study, the true narrative is the increasing erosion of trust in Western financial systems. Capital is starting to shift from paper assets to tangible stores of value like gold and silver as governments wallow in unpayable debt and central banks covertly lose control of their currencies. According to him, we are in the early phases of a monetary reset that is being driven by countries getting ready for a world beyond the dollar rather than by headlines. While mainstream analysts focus on rate cuts and data, Macleod looks deeper at the balance sheets of central banks, the flow of physical gold into Asia, and the tightening liquidity in Western markets. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets. We'd love to hear your predictions. Drop a comment below.
Yeah, I think basically, when you look at how much gold and silver and indeed platinum group metals have soared in recent months, some sort of correction was definitely on the cards. But the interesting thing is that the whole thing has really been a short squeeze. If you look on COMEX in particular, the speculators are just not there. I mean, they haven't really bought into it. The way I would measure that interest is looking at open interest. An open interest in gold is less than half the long-term average. Open interest in silver is roughly at the long-term average. I mean, there are obviously a few speculators in there, hedge funds, whatever, but not all that many. So this shakeout, it looks sort of suspiciously coordinated. I don't mean that, over the weekend, various bullion banks got together and had a meeting and decided to bash the market. But you do get this feeling, when you're a jobber. I mean, I've known jobbers, which is really what they do. I mean, the market maker is a jobber, basically. I've known these guys. I've been on the other side of them since 1970. And they do have this sense, if you like, in the market when it's right to bash the price of something which they're short of. It's almost like a second sense. And if they haven't got it, they're not going to survive terribly long in whatever they're dealing in. So if one good dealer has got the feeling this is the moment when it's going to come off, the others also have the same feeling. So, you get this sort of compounding effect. And of course, I think what the buyers are doing in this, and remember, we're not talking retail market here. We're talking about wholesale market, and we're talking about big derivatives. The buyers, I think, they would just sit on their hands and watch this play out a bit before they decide, shall we buy some? And if so, what's a level? And so on and so forth. So, this is why I think this shakeout has been so severe. I mean, I'm looking at what's happened in silver. I mean, silver is down nearly 7%. Platinum's down 5.7%. Palladium down 5.3%. And gold, as you said earlier, is 5%. I mean, these, given the rise that we've seen, this isn't actually all that great. I mean, you would just say this is volatility. I've always told people, don't trade this market. I mean, you'd be nuts to trade it because the guys on the other end are so powerful. They'll take every cent you've got off you if you're going to trade it. And, the answer basically is that you've got to work out why you're interested in gold and silver. You've got to understand what gold and silver, particularly gold in the current context, what it is. You've got to understand that it is legal money without counterparty risk. Forget what the US Treasury says about gold being a pet rock or whatever. The reality is that in our common law and in everyone's common law, gold is money, it's final settlement, there is no counterparty risk. And the volatility isn't so much in gold. Obviously there's been volatility in gold, but it's mainly in the currencies. So when you see, for example, the People's Bank of China buying gold, the way to look at it is actually they're selling dollars. And they have other use for those funds. But basically they don't want dollars. So that's, if you like, the sort of their gold purchases are almost the small change, which they haven't got any other use for, because they've got quite enough gold. Not necessarily within their reserves, but the nation has lots of gold spread around various accounts, including the People's Liberation Army, the Communist Youth Wing, and so on and so on and so on. So that's the way to look at it. So you've got to think, okay, do I buy gold because I think that paper currencies are going to lose purchasing power? If you think that, then the answer is yes, and you hold it, you hoard it, you tuck it away. Otherwise, don't mess with it. Forget it. It's a waste. You'll just have sleepless nights if you try and trade it, because I can tell you, you try and trade this market, they will take you for every cent you've got. That's the reality of it. I think there's another point which is worth making. We've seen various large American banks, turning bullish on gold. Jamie Dimon said he wouldn't be surprised if it went between 5,000 and 10,000. You had Morgan Stanley saying, you should put 20% of your portfolio into gold, which actually is an extraordinary statement from an establishment bank like that. I could imagine that Scott Bessent would sort of phone him up and say, "Why are you messing up my world?" But they've turned bullish, and from the point of view of market makers, the bullion banks who are trading, if you like, on the right side of the quote, this is not helpful to them at all to have this. So this is why, if someone told me that there was a coordinated move to basically bash gold and silver and also platinum group metals lower, I could believe it. I really could.
In his study, Alasdair Macleod starts with perspective. He reminds us that abrupt corrections, like as the recent decline in gold and silver, are typical of robust markets that have surged too quickly and too far rather than indicators of collapse. Although silver's 7% loss and gold's 5% decline may seem significant in the news, they pale in comparison to the substantial advances both metals have made recently. But what really sets this correction apart is how accurate and well planned the selling seems to be. It bears the signature of seasoned market participants who are adept at managing momentum, mood, and timing. Long-term investors typically emerge stronger in these circumstances, whereas short-term traders are frequently caught off guard. Macleod's advice has been consistent. Don't trade gold and silver. Understand why you hold them. They aren't speculative assets, they are forms of real money, free from counterparty risk. The volatility we see, he explains, isn't in gold itself, but in the paper currencies used to measure it. Show some love by hitting the like button, subscribing to the channel, and turning on notifications.
But I think the central bank community, particularly in the global south, BRICS and so on and so forth, they can see what China is doing. With the SGE opening vaults in Hong Kong and also Saudi Arabia, and there are probably plans for other ones, or certainly facilities elsewhere, whereby gold can be exchanged for yuan. This is setting up a system which will allow the Chinese, if it is necessary, to protect the yuan's value by turning it into a gold substitute. But that would be at the international trade level. The idea that individuals in China would be allowed to, have a gold exchange, if you like, for their yuan. I don't see that at all. The authorities in China, I think, are all about hanging on to what they've got. They don't really want to part with it. And I think it would be a mistake to sort of think that the Chinese authorities, whether we're talking about PBOC's reserves or whether we're talking about the hidden holdings, sort of spread around the various communist organizations, government organizations, I don't really see that they will be feeding this new vaulting system outside China. I think they're going to still hang on to their gold. But I think what they will do is they'll say, well, what you could do is you could acquire some gold, put it in that vault. You could exchange it for yuan when it comes to trade settling and all the rest of it, so that you foreign country, have the facility to trade in a gold-backed yuan. They will set the rate at some stage. I think that's inevitably what's going to happen. And it doesn't really require China to part with some of its gold. Maybe a small amount, but basically, I think the idea is to make the yuan, if you like, the dollar's replacement. And this one will be a lot more secure than the dollar. I think that's the important thing. And as the dollar declines, we're coming to, there's no doubt in my mind that we're coming to the end of the fiat currency system. The Chinese, I think, are perfectly aware of this. And they want to protect their currency. They want to protect, their position. And they don't want other currencies, for goodness sake. If the dollar goes down, what happens to the other currencies? They go with it. It's as simple as that. So they will want to trade in their own currency. Of that, I'm absolutely convinced. And they will want to protect the value of their currency. So we can see this is beginning to happen. Now, I think the central banks around the world can see it. I think governments are beginning to see it. I think some of the really big players, like ultra-high net worth individuals, the sort of really wealthy families around Asia, who liaise with politicians, who have them round to dinner, and all the rest of it. I think this is the back chat that goes on with these meetings. They know about it. I think that some of the smarter hedge fund managers in the US probably know a little bit about it or suspect it. The rest of the investment world has not got a clue. But you'll find that the information filters down. It'll filter down gradually as, events unfold. And there will be if you like, a growing understanding actually about what actually is happening. And we're looking at the end of the fiat dollar. I think this is really what it's all about.
Macleod's statement is essentially a warning. Few people are aware of how far this shift has already progressed as the globe silently gets ready to abandon the fiat currency system led by the United States. China's establishment of gold-linked trade networks is a calculated effort to transform international finance, not only a practical one. Beijing is fostering confidence in its currency and preparing for the day when faith in the dollar ultimately falters by permitting other nations to trade in yuan backed by gold. This type of change doesn't happen overnight, but once it starts, it can't be stopped. Investors with long-term goals are discreetly shifting their money into hard assets. Nations are developing new trade alliances outside of the currency, and central banks are already hoarding gold. Western markets, meanwhile, continue to prioritize debt-driven expansion and quick profits, which is a risky detachment from reality. According to Macleod's analysis, gold is evolving into the basis of a new monetary system, rather than merely a hedge against inflation. Gold's status as actual money is gradually returning, vault by vault, as trust in paper money wanes. And for those who are paying attention, this is the beginning of a global reset that might alter how countries trade, hold wealth, and define value in the coming decades. As this transformation unfolds, the question isn't whether the system will change, it's who will be ready when it does. Thanks for watching. If you like this video, give it a thumbs up, subscribe, and turn on post notifications so you never miss an update.